and welcome to the one-to-one global online event and the assay. Today I'm here with Dan Porter, who is portfolio manager at Pure Asset Management. So Dan, thanks for joining me here today.
Hi, Amy, and thanks for having me on.
Absolutely. Great to see you again. So let's dive right into it. So Pure Invest convertible notes is a dedicated strategy. So can you give us a bit more information on this investment strategy and the three-step process? So what makes Pure different from other investors?
Yeah, absolutely. Yeah, no, we are quite unique. We do have a sole focus on hybrid debt, what we call it, as a quite a broad term. So that encompasses things like convertible notes, bond warrants, preference shares, that type of thing. We're the only dedicated fund in Australia doing that on a sole basis. There are other funds that do that as a unique offering, but we're the only dedicated ones who do that. There are others like that offshore, but in Australia we're the only ones, which puts us in a pretty unique position. But look, the fund, what we try to do is provide a better risk-adjusted return to our investors, and I think that's what's being delivered. We have two funds. I run the resources fund, and certainly in that in the 2.5 years since we've been up and running, we've delivered a far superior return than the market, with 1/5 of the level of volatility. So we've been in the market by around 13-14 percentage points in that time, with volatility of around 5% versus the broader market closer to 27-28. So in that sense, it's working. Very pleased that the theory works in reality, and certainly our investors are quite happy with the way that has been set up. A focus for the fund too is on distributions, so that will always be a very strong feature of our investment style, and we try to aim to deliver a 15% return per annum, about half from capital growth, so growth in the NAV, and about half from distributions, and we've done that to date.
Okay, great. And so maybe we can look a little bit more at the resources fund. So you started to talk a little bit about how it's been performing. Do you want to give maybe a bit more background into, maybe a little bit more of the focus for the resources fund?
Yeah, absolutely. So look, we launched the fund about 2.5 years ago. That was a good time to launch a resources fund. Commodity prices were in upswing. We had good early performance. And capital raising for us was easier, much easier than it is now. Certainly has been a very tricky market over the past 12 months since that point in time. But look, we are a small fund. We've got about $80 million Aussie under management. That is growing though, so it is a product that is resonating with investors. Certainly, it suits the private wealth manager, high net worth style. We don't have any institutional money in the fund at this stage, but hopefully that will change over time as we get bigger and deliver those returns. So look, what we are focused on is really investing in smaller companies that are on a growth path, and that means basically those companies that have line of sight to cash flows over the next sort of 12 to 24 months, or producing a small amount of cash flow now and wanting to grow that. Given we're on the debt side, that cash flow ability is very, very important to us, because these companies have to pay back the debt at some stage. But the beauty of what we do is we're giving capital to these smaller companies to allow them to grow. We have a superior position in their capital stack. We outrank equity, but we also take an equity option in that company as well. So as these companies grow and deliver a solid earnings growth, hopefully their share price grows at the same time, and we collect the benefits of owning that equity as well as having the capital returns on the debt.
Okay, interesting. And so where do you see the capital, the capital that is going into the market? Where do you see it going right now? So, what are some of the key themes that you're noticing? And is it commodity specific or more general than that?
Yeah, absolutely. Look, I think it is resources is one of those sectors where there's always a hot commodity or a flavor of the month, and certainly that tends to change every 6 months, and depending on whether commodities are going up or going down. So it is a little bit fickle in that regard. But generally, the strongest theme that we've seen emerging over the past 18 months since, we sort of came out of COVID lockdowns has been that reshifting of the supply chain and that strategic element of access to critical and strategic minerals. That's a very broad term, but we have seen a big push on from government to invest in that area. There's certainly been some momentum shift from offshore governments. We've seen the US with the Inflation Reduction Act. That's positive for Australian producers over time. Not quite yet, but they'll get there. But certainly the weight of capital is shifting towards there. Now, it is also still, clearly evident in, I'll say old world type commodities. But you need big licks of capital to go into those sort of bulk commodities as well. And that's just not where we play. The critical minerals, specialty minerals is much easier for us to play in. So we've got a good exposure to that in the fund. And I think that will remain a feature over time. But fortunately for us, those commodities are likely to be increasingly in favour with other investors. But I will say too that the benefit of what we do is that resources is becoming an underfunded, undercapitalized market, but at the same time too, it's increasingly difficult for us to raise capital, and that is reflected in the nature of markets at the moment. That will change over time, but certainly what it does allude to is this supply-demand dynamic that everyone keeps talking about is only building over time. So look, when commodity prices do really bounce, and it's all likely to be cyclical going forward, but I think when the markets bounce back, the commodity price reactions will be sharply positive. I can see that happening time and time again over the next decade.
Yeah, no, absolutely. I want to shift the focus a little bit to looking at Australian companies and investment into Australian small caps. So how do you see Australian listed small caps performing over the short and medium term within this kind of environment?
Yeah, look, I think, just taking a little step back and just shaping the market, the last 12 months has been quite challenging. Obviously, we saw a big drop in commodity prices last June, and it's been exceptionally volatile ever since. We've seen different commodities move in different shapes and patterns. They tend to move on the whole together, but that has really changed over the past 12 months. And we've seen huge volatility in the underlying equity performance as well. It is a traditionally more volatile sector, the small end of the resources market, but we've never seen anything like this before, which has been very challenging. And certainly, I think the other element that we've seen is inflation. And everyone's talking about inflation all over the world, but nowhere has it been stronger than in commodity markets and for mining companies specifically. So that has had a huge impact. Even if commodity prices haven't moved that greatly, the cost of pulling them out of the ground is just astronomically high and going up all the time. So it is crunching profitability. And the mix of those two things has really meant that there's a great inertia in the market at the moment. I'd say in the last 2 weeks, we've seen some commodity prices bounce, and that's been good. People are starting to look at the sector again and thinking, maybe we're through the worst of it. I think the reviews on that are still a little bit mixed. But I think over the next 6 to 12 months, there will still be opportunities. Good companies with good management teams are still going to progress projects. I would say that those are the diamond in the rough, though, over the next 12 months. And hopefully we see a sustained lift in commodity prices. And if we do start to see that, for a quarter or two, then I think we'll really start to see the money flowing back to the market and things will unlock again. And the IPOs will start coming back, equity markets unlock, debt can go in, projects proceed, happy again.
No, yeah, absolutely. I mean, you just started to kind of get into this, but is this inflationary period and kind of the downturn in the market, is that one of the biggest kind of concerns for investors today? Looking at the market, are there other kind of key issues to look at?
Yeah, absolutely. I think inflation is one of those things that in mining it's not going to go away. Things are just going to be more expensive. And getting staff is increasingly hard as well. And then you're having to pay more for good quality staff. So That is going to be a big issue. Is just that talent shift into the resources space just isn't there anymore from younger generations. For a whole myriad of different reasons that we don't need to go into, but it's just a nature of the market that those cost bases are moving higher. Certainly, I think probably the biggest issue that we see though outside of that cost base area is permitting and getting mining leases approved. That it doesn't matter what you're doing, what commodity really, it is increasingly difficult to get a mining lease in any jurisdiction in Australia. Bureaucracy has a lot of checks and balances at the best of times, but 20 years ago it would take you 18 months to go from exploration to production. Now it's more like 7 to 10 years. Wow. And that is a really big concern for what we have planned in terms of energy transitions and that type of thing. Certainly, it feels like that message just isn't getting through to the political sphere that this is a real issue and it's only going to make things worse.
Yeah, no, absolutely. I mean, that leads really nicely into my next question, which is kind of looking at what is the role that you see for the government in Australia to help with the energy transition, whether that's with the funding side or the permitting side. What do you see there?
Yeah, look, I think there has to be the issues are largely at the state level. And the rules and regulations that the state governments have, and then the final piece of the puzzle is going to the federal side. I think there needs to be a very large streamlining of that process, and I think there needs to be time limits put on place to approve or disprove a project, or reject it, because sometimes these processes do drag on for 7 to 10 years, and there seems to be no momentum behind it, but there's also no penalties on the government side for delaying it either. And it doesn't matter if it's copper or nickel or cobalt, or people just aren't getting those projects approved. So that whole process needs a very large streamlining. There's often multiple touch points for a mining company with government. It gets very confused, and then you're resubmitting the same information to various different departments time and time again, and there's just great inertia from that. Now that scares off investors, and so I think if you reformed that process and reshaped it and had time limits on it, investors would come back, because investors get very nervous when you can't get returns quickly. It's not, it's certainly when I've had various roles in the past, hedge funds are looking at quarterly returns all the time, right? And I think that's the nature of the market these days. If something's not there in 3 to 6 months, that's an issue. But look, if when I started covering small cap resources, I quickly learned that the word imminent meant sometime in the next 3 years. And I think if you reform that government process, and the government needs to do more than just have big grand openings of things and that type of thing. They make all these big statements about critical minerals investment in Australia. But, for example, we're invested in a tungsten mine in Tasmania. That took 15 years to get a mining lease approved. That is not a situation that should ever happen. Now that tungsten product is the first in the Western world in 20 years. It's a critical mineral for defense. And certainly the US government has been quite interested in it as well. But that shouldn't have taken 15 years.
No, absolutely. I mean, that's quite interesting. We've heard a lot about similar permitting issues happening in the US, and I'm sure globally as well. To wrap things up, really, do you have any final comments you want to share? The state of the market, any kind of outlook for kind of the state moving forward?
Yeah, absolutely. Look, I think there's been a lot of discussion probably in the last 2 years about a resources super cycle, and I think we're in that. I think investors need to know that commodity prices will still be cyclical. They are on a long-term uptrend, but there are periods where they do pull back. Nothing moves up in a straight line. And certainly it's easier to forecast supply. It's very difficult to forecast demand. And sometimes there's nuances to that you just can't foresee. So I think over the longer term, though, there is a greater and greater need for mining and commodities, hard and soft commodities, old world and new world. The world is not slowing down in terms of growth, or it is slowly now, but, we're only going to need more and more over the longer term. And certainly with the energy transition, we're going to need a lot more commodities. And I don't think there's been a lot of detailed work gone into how much we need. But what that requirement requires everyone to work together, whether it's investors, the government. The government needs to open up lines of financing, and certainly needs to make project approvals easier and more streamlined. So, look, I think there's huge opportunities in resources. It is a somewhat unloved sector at the moment, but it is always a necessary sector. And Australia is pretty uniquely placed in the world. We have some great commodities, some great people to run these companies. So I think there's still huge opportunities to be made. And I think, if you've got a space in the market for resources investing, I think we at Pure have a pretty good product that appeals to most investors.
Absolutely. That's really kind of nice, positive, potentially positive message to end things on. So Dan, I want to thank you for joining us here at 1-to-1 in the assay today.
Thanks, Amy. Appreciate it. And hi to all your listeners out there. Hope you got something good out of that as well.